Welcome back to Contributors Corner, where we don't just scratch the surface, we dig deep and bring the light up with us, especially when it comes to stories that actually move your portfolio. I'm Lyndsay Malchuk, solo in the spotlight today as my partner in capital markets crime, Michael Sakuro, is off somewhere conducting field research, which I'm pretty sure actually just means golfing with a few fund managers. So we'll get to the truth of that when he is back. But don't worry, we still got plenty of heat coming your way, and today's episode, it's pure gold. Literally. We're talking junior miners, the major players eyeing them, and one Nevada-based explorer that just made a very loud statement in a quiet market. Joining us is Paul Sun, CEO of Eminent Gold, to talk results, risk, and the reality of building value from the ground up. Paul, welcome. It's so great to see you. Are you ready for summer?
Absolutely, yeah. It's been a long winter, so we got a few months up here in Ontario, so we'll enjoy it while we can.
My goodness, Ontario has had the never-ending winter this year, it feels like. Well, I'm glad you're with us today. I mean, who better than you, who is in the middle of the exact topic that we are going to talk about today? So why don't we jump headfirst into just that? We'll zoom out before we zoom in. You know, the junior mining space has always been cyclical, or cyclical. Yeah, cyclical. We'll say that. Cyclical. We'll say that. We'll go back and we'll say that. Cyclical. But lately, you know, we're seeing something very different here. What's your view on the current state of the juniors? Is this just a flash of interest, or are majors finally waking up to the reality that they've just got to replenish that pipeline?
Yeah, I think it's a great question. I mean, we are obviously seeing great commodity prices in general. Obviously, gold pushing $3,400, so it's
Yeah.
it's an all-time high. We think secularly it's going higher. But with that said, the junior gold capital markets is still, very tight, to access those funds. So I think there's kind of the have and have nots in terms of, what stands out with value and what the majors are looking for.
Yeah.
The majors are in a great position, like investors, in that there's an opportunity, I think, to really grab value, at good prices where we're at right now before things, really continue. And I think things will get frothy eventually, as they always do, getting back to your cyclicality comment. But right now, I think majors are flush with cash. They're obviously producing, so they're benefiting from the high commodity prices, and they're now looking down opportunistically at what are going to be the projects that are going to replenish those reserves. Because at the end of the day, that is the mandate of a senior. They need to replenish those reserves. So they're looking for companies that have projects that can move the needle for them ultimately. And I think we're also seeing a paradigm shift in that, look, there's gold everywhere in the world, but let's face it, no one kind of wants to deal with geopolitical risks if they can avoid it. So if they can stay close to home and be in a good jurisdiction, with great projects, I think those are going to be the stories that stand out.
Well, yeah, I mean, let's be honest, capital's tight, sentiment's cautious, and yet we're still seeing majors move in earlier than usual, like Kinross, which we'll talk about in a second. That feels like more than just curiosity to me. What are you hearing as an insider? Are you observing that big players are shifting from spectators to participants faster or more often?
Yeah, I think they're starting to realize, and again, usually you see a lot of M&A at the beginning of a
Yes.
hot cycle and at the end. And at the end, that's when valuations are stretched. That's when majors tend to make mistakes. And then, you see those write downs of the companies that they bought for stretched valuations. So I think now they've kind of, learned their lesson, so to speak, and they're being opportunistic looking right now on how to get a toe in to projects now. Because at the end of the day, investing a few $1 million when you're, multi-billion dollar companies, it's not a big deal. But if that project works out for them, again, it moves the needle. So I think it is past curiosity. I think it's a strategic change in thinking in that they want to kind of get in earlier now because it's also competitive. They are ultimately competing against their peers, which are majors. So you're kind of starting to see, maybe not the massive like the largest companies, but still, multi-billion dollar market cap companies coming in because they want to get that toehold before, the ultimate, like the big guys come in. So I think that's kind of what we're seeing.
So let's lean into that just a little bit further. I mean, Eminent is a great example of majors stepping in. Let's talk about the elephant-sized partner in the room, Kinross. I mean, they didn't just take a peek at Eminent, they stepped in right after the first hole. That's not normal. Walk us through just how that came together.
Sure. Yeah. I mean, Kinross, first off, great partners. We've been talking to them for the last, few years. And when Hot Springs at the time was just a hypothesis and an idea, their technical team gets along very well with our technical team. And I think they were at a GSN uh, presentation in Nevada and they heard the hypothesis and it intrigued them. But of course, it was very early. So, they've been watching us each step of the way as we've methodically de-risked the project, as we've shown that it is actually a direct analog to that 50 million Getchell trend just 15 kilometers away. They've seen us show that there's gold and arsenic and pathfinder minerals on surface. They've seen that we've shown that the plumbing works the same way on our side of the trend as on the other trend. So they were already very educated and up to date on what we were doing. But when we put out that first hole, and by the way, that first hole was the first hole of the company. It was the first hole ever drilled for gold on our side of the trend. So I think, in a previous interview with you, Lyndsay, I said, we're making history, and that's basically what we did. The very first hole, we yielded significant gold and arsenic, and that's when we got a bunch of phone calls, and Kinross was already effectively educated and ready to go. So they, to your point, said, we want to come in a meaningful way. We want to come in for 9.9% of your company, and we want a pathway to 19.9. And we also want to provide a technical committee where we can collaborate. And it's a win-win for us because we are still sole operators. We still are sole decision makers, but we can lean and access their deep bench strength that they bring to the table. So it's been a great partnership so far.
Well, what's interesting here is that Kinross didn't even wait for that full de-risk story. They saw early data and they really just leaned in. Now, do you think that signals a broader shift in how majors are managing exploration risks by outsourcing it to juniors?
For sure. I think at the end of the day, what majors do well is they produce, they operate, and what juniors do well is they find and they explore. And certainly, to look at our technical team, our chief geo has found gold twice before, so he has that resume, if you will, and that relationship and that knowledge. So I think when things are so early, you do have to bet on the team a little bit and the technical expertise, and I think that's what they're doing. I think also for Kinross, they historically were the poster child for being in high risk areas. They were in Russia, they were in Mauritania, and I think now they're trying to get a foothold in Nevada. And at the end of the day, Nevada is Barrick and Newmont territory. I mean, Nevada goes and Barrick and Newmont, I mean, they're almost one of the same. So for Kinross to have an advantage, they have to get in there faster, than before, others, take notice, so to speak. So I think that's kind of also why specific to Kinross and why they came in early because they know they want to be in a safe jurisdiction and they also like the team and like the projects and what we're doing.
Well, capital markets are a little skeptical right now, that we know, but let's be real, majors, they're starting investing directly into juniors instead of what you talked about, M&A. That's a big sign right there, right off the bat. So they need ounces, and you as a junior, you're where the ounces are hiding. It's the classic resource cycle playbook. I mean, big guys cut back the exploration, the cycle turns, the boom. They realize they've got no pipeline and then enter the juniors with risk tolerance, like you said, new tech and ground level intel. So, let's flip over here. Let's take your Hot Springs range. It's getting a lot of buzz, but you didn't stop there. So we'll talk about Celts and the bigger strategy. What makes a project attractive, not just to the market, but actually to potential future acquirers?
Sure. Yeah. I think at least Eminent's mandate, when we, put the company together, we knew that we wanted to be in a safe jurisdiction, and Dan is located in Reno, so he's known as Mr. Nevada. So he wanted to be close to home. We knew there was a lot of gold there, but we also didn't want to be, a story where we're just, working on something that's kind of already been found, and we're just trying to make it bigger. We knew we wanted to come at Nevada using, new concepts and fresh perspectives. And the Hot Springs Range project that came to us, as mentioned, was an out of the box thinking, where you'd think in an area as prolific as Nevada, everything would have already been thought of and found already. And we're showing that that's not the case in Nevada. And similarly with Celts, which is our most recent acquisition, it was brought to us by the same technical team that brought Anglo Ashanti the Silicon deposit. And Silicon and Merlin are these two deposits that have now grown to 16 million ounces in size, 1/6. So it's the most recent major gold discovery out of Nevada in recent times, and it's also the newest geological discovery model coming out of Nevada. So once again, you have an area that people walked over, thousands of times, never saw gold on surface, and thought, well, there's not going to be gold here then, like, forget it, move on. And yet,
Yeah.
again, here's an opportunity right in Nevada where there's millions and millions of ounces. So that's kind of how we think about our projects and our portfolio. We try to de-risk the portfolio as much as possible by, using analogs and looking at the science, not trying to recreate the wheel, but really coming at it where it's going to move the needle. It's a new brand new discovery, as opposed to just kind of, making something existing that, didn't work at, you know $1,500 gold, but now that the gold price is higher, now, like, all of a sudden it's like an exciting project. Like, that's kind of not really where our headspace is at. So that's
Right.
that's what we're trying to do with Eminent.
Now, this is something we're seeing across the space. Juniors trying to build optionality, knowing that majors want a menu, not just one meal. So, how does that influence how you structure your portfolio?
Yeah, I think that's exactly right. I mean, we didn't want to be a one project story because, again, getting back to exploration, it is
Mm-hmm.
it is a risky endeavor. So we wanted to diversify our company by adding, different projects and different paths to discovery. So they're not all the same style. We have, Hot Springs is a Carlin style system, as an example. Celts is based on, a steam rhyolite dome cap, as an example. Gilbert South, our third project, is a bonanza grade vein system. So we're diversifying the models within the portfolio, and we're opportunistic. I mean, we're always looking at what's out there. We tend to get the first call in Nevada, which is great, and we're opportunistic on what we add, but we're always trying to have that pipeline to a discovery. So, hopefully all three work out, but, that would be fantastic. But if they don't, we kind of have another one behind it and another one behind it. So that's exactly, you hit that on the head with Kinross. Is, they love Hot Springs, but they also love
Mm-hmm.
Celts, and they also love our third project. So they know that, they have a lot of shots on goal by investing in our company. It's not like a one hit wonder, so to speak.
So, what's the message to investors? Of course, follow the smart money. There's a $1 billion question here, or at least $100 million one. When juniors like Eminent start consistently hitting, what's the smart money doing? Because I'll tell you what it's not doing. It's not waiting for a resource estimate to come in before they start accumulating. So, from your vantage point, what kind of juniors are going to attract the most attention in this cycle? Is this about grade, or location, or team, or is this just about who can deliver real variable results?
Yeah, that's a good question. I think there's a lot of those things. I mean, that's, as a past, banker that's financed a lot of mining companies, I kind of, look at the big picture of it. So it's obviously you want to follow the team, and
Yeah.
the fact that the team's been successful, twice before. So they've, found gold twice, they've monetized discoveries, and as a result, they've created a lot of shareholder value. So
Yeah.
that's, a good sign. I look at jurisdiction. You don't want to be in a situation where, maybe there's super high grade in some area, but then you wake up one morning and then that asset's been expropriated away from, from a third world government type situation. So, grade is important. We are obviously looking for grade. Nevada's got, high grade, but really being in a great jurisdiction kind of mitigates that risk, as we talked about earlier.
Yeah.
So I think for me, it's just trying to tick all the boxes on where you're going to get the value. The juniors are still at a compelling valuation, including ourselves. However, I think, as you know, Lyndsay, like the biggest return that an investor gets is at that inflection point of when a company makes a discovery. So with us, I think being in the infancy of a major discovery at Hot Springs, as an example, you're going to really see that torque. We have a tight share structure. We only have 76 million shares outstanding. Half the company is owned by company insiders and technical personnel, which is also what you want to see. You want to see that management is putting their money where their mouth is. They're very invested. So you're coming in and you're aligned with management to make that discovery. So all of those ingredients, I think, is what should make a company, bubble to the top in terms of how you choose between, because let's face it, there's a lot of juniors out there, but you are looking for that value. But right now we're kind of at the point where you can have your picking, so you might as well pick the ones that stand out from a value perspective.
Okay, Paul, I'm going to actually just pause the conversation for a moment on the junior sector as a whole and throw some space over to Eminent's drop of your fresh drill results from that Hot Springs Range project. This is gold mineralization that you hit again, and this is the kind of news that makes retail eyes pop and institutional ears perk up. I mean, I want to hold space for this for a moment and unpack your news. What does that say about your confidence heading into the next phase of drilling?
Yeah, it's giving us a lot of confidence. I mean, obviously, we had the very first hole, which had gold and arsenic all through it. And again, the importance of arsenic is that that typically happens in Carlin style systems. So the fact that that was there was very positive. Then we put out results on the next two holes, which again each had gold and arsenic in that as well. So as we drill each hole, it's giving us more information because it's such a large area. That the first hole is like one data point, and then the second hole is another data point, and then you're in a 2D, and then you get the third hole, and you're trying to get to like a 3D situation, and you're trying to use the past information to vector towards where more gold is going to be, where you should test. So that's kind of really where it's been great. We collaborate with Kinross. They kind of give us their insights on where to go, but I mean, the fact that our very first three holes, had gold in it is, I think, very satisfying and very successful, because at the end of the day, a lot of times, you're putting 100 holes into something before you're really finding something. So, maybe it's just luck. I think it's, kind of hard work and strategy, coming together. So we're going to continue to drill it and, continuing to prove out the model and improve the information, but we're off to a great start.
You definitely are off to a great start. Your release says you're vectoring toward the feeder zone. Now, I'm not overly geo-savvy, as I'm sure some listeners can relate. Break down how significant that is in terms of potential discovery upside.
Yeah, so basically the way, if you imagine, this area of Nevada is very broken up, and the way the plumbing works is you have these deep feeder faults that bring gold from depth, and they get trapped by these horizontal thrust faults. So there's a lot of faulting and alteration that's happening. So there's just so many faults to test and areas. So you're really trying to find. And each area could have gold coming up in its own right, which is effectively what we've seen so far. But in an ideal world, you're really trying to find that high grade concentration. So you're always constantly trying to see try to build out the 3D model and position yourselves where the bulk of that mineralization is coming from. And of course, we look across the trend, which is only 15 kilometers away. We're seeing how Turquoise Ridge, which right now I think is the highest grading mine in at least North America. We're looking at Twin Creeks. So those mines have the same plumbing as what we think we have on our side. So we're
Mm-hmm.
always looking at how those mines work. What we're also very excited about, including Kinross, is that, not to get too technical, but the gold that we found so far in the core is oxidized as opposed to being sulfide. So what that means is the recovery of that gold is very inexpensive. So typically what you see is you see oxide kind of towards the surface and then it goes to sulfide. And right now we've seen everything that's only oxide, which means recovery is amenable to very cheap methods. So again, not to say it's going to stay like that, but so far so good, which is also why we're very excited. Yeah, fingers crossed, exactly.
Yeah. Well, take us for a little walk through the scale of the system then. Is this a 1 million ounce dream, or are you chasing something even bigger?
Yeah, we're definitely chasing something bigger. I mean, it's funny you said 1 million ounces. I mean, we've dropped projects in the past because we after the work we did thought they were only 1 million ounces, and there's nothing wrong with 1 million ounces.
No.
Certainly, depending on the market, you could do the ounces of the ground calculation, and that should at least be your market cap. But we're really swinging for a big major discovery, and the land package that we have on our side effectively mirrors the land package of the other side of the trend. So on the other side of the trend, again, you have 50 million ounces, you have multiple mines there. On our side, it's just us right now. And we have three distinct targets. We're only drilling one of the targets, which is named Otis, but we have two other targets named Sitka and Eden. And each target in their own right have multiple swings at a major discovery. So we have a lot of optionality within each project. Um, but yes, we are definitely looking for, double digits. We have the envelope, we have the size. We just need to, do the work to keep moving forward.
Okay, Paul, how are you actually balancing exploration success with market messaging? Because drilling's expensive, and retail investors, we all know, they want quick hits. How are you balancing that?
Yeah, it is always a balance. I mean, as a company, we operate very lean. As mentioned, we're big equity holders, so
Yeah.
most of the money that we put in ourselves or that we raise goes into the ground. We do focus predominantly on exploration, but with that said, it's one of those situations where if you're not a Kinross that has been following us and we put out great results and no one's watching, then you don't get that market reaction, and the ultimate, that's what you're trying to do. You're trying to build value for shareholders. So um, we are now starting to market more. Obviously we're on with yourself and with others to
Mhm.
try to get that message out there. So provided we continue to have good success, then we'll be rewarded for it.
You know what I love about this release? It's not hype, it's data. You've confirmed mineralization across multiple zones. You're vectoring toward the feeder source, and you're still open in multiple directions. That's what exploration success looks like in real time. My question is, what's the game plan in your sector for boots on the ground right now to keep that momentum going in a market that's still pretty unforgiving toward juniors, even with solid results?
Yeah, it is difficult for sure. We try to be as lean as and mean as we can. So, we obviously have a budget. We do our best to follow it. Kinross, kind of vets it, or they're happy with what we're doing. Certainly, if we get to that market where um, valuations, start to move higher. All our projects are ready and are permitted, so we could be in a scenario where we have drill rigs on each of our projects, and then we're just kind of moving forward, moving faster. But right
Right.
now, we're just trying to be efficient with the capital. I mean, over the last few years, even though we've had not bad gold prices, we've been kind of head down. We've postponed drilling even while we could have drilled earlier because, to my point that I just made, if we put out a result on a good drill hole, no one would have really cared. So we're trying to balance that market dynamic with pushing forward on the exploration, but we are very
Mm.
technical in what we do. We're not married to anything. If we find that something's not working, we're move on. And it is all about the data. It is all about what the opportunity is, and we feel like we're in a good spot. So it's not trying to hold on for dear life if something's not working. If it's not, it's not.
So is that your advice that you would give, overall to the junior sector is, if it's working, go with it. If it's not, shift. Like, what's your advice there?
Yeah, yeah. I mean, like I said, I mean, we've had, while we've been keeping our head down, we had, I think, four projects at one time. We ended up dropping two projects. One project, as I mentioned, we dropped because we didn't think it was going to be big enough. So,
Mm.
another company picked it up after that, and they were happy with the size that it was eventually going to be. Another project that we had, we were very excited about it. The geology was good, but it looked increasingly that the permitting was going to be a problem because it was on
Mhm.
U.S. Forest Service land in Nevada. So it just seemed like pushing water up a hill. It was going to be for a small company that doesn't have a lot of capital. We didn't feel it was the best use of our money to try to get be stuck in permitting purgatory forever. So we made the hard decision to drop it again because we just thought that wasn't the best use of the capital. So that is my advice. If something's working, keep working it. If it's not working for whatever reason, then you just might have to make the hard decision to move on. And I think right now we're very happy with our three projects. We have a lot of optionality. Could something else come along where we had a fourth project? It could. We don't need to, but that's kind of the way we think about it.
I keep hearing that episode of Friends in my head where it's like pivot, pivot when he's trying to put the couch up the staircase. So if it's not working, pull a Ross and just pivot.
That's exactly right. Yeah, as they say, one, two, three, hernia.
Yeah. All right, Paul, before we let you go, we're going to hit you with a little game we like to call Rapid Fire Round. So this is no hedge, no dodge, just a few burning questions capital markets folks are dying to know. So 6 questions, all under 2 minutes. You ready?
I'm ready.
Okay, here we go. Number one junior you'd team up with tomorrow if you could.
Oh, I mean, not in our space. I've been following what Tier One's been doing.
Okay?
That's silver, so I'm a precious metal person. Obviously, they're like undervalued. They're in Peru. It's also a safe jurisdiction. I think they're onto something. They're on their second round of drilling. So I would say, not necessarily. It would be a good way to diversify. We'd be gold and silver, so that could be interesting. But that's the
That'd
first
be
one that comes to
powerful.
mind.
Okay, second one, biggest misconception about Nevada exploration.
That it's all the gold has been found. People say, yeah, there's been a lot of gold produced, but hasn't it all been found? And the answer is no. Just because you can't see it on surface doesn't mean it's not there, and therein lies the opportunity.
Love it. Okay, number three, more money or more drills? What gets you closer to the win?
Well, those things go hand in hand. You can't drill without money, and you can't get money without drilling because a lot of people want to see it. So it's but I mean, at the end of the day, drilling is the thing that, it's the truth teller. So you do need that, but of course you need to be funded to drill. So it's
Fair
a
enough.
it's a tough one, yeah.
Okay, next one, hardest part of running a junior right now.
Yeah, just fighting with people not necessarily understanding the opportunity.
Mm.
I think exploration. You can take a basket approach. As we mentioned, it is high risk. We've done our best to de-risk it, but I think that is the issue. Sometimes trying to convince people that you're onto something, they're not technical. So when you're at an early stage company, they don't necessarily understand the opportunity, which is why doing shows like this is helpful. But I think that's the biggest challenge, trying to get people to understand the opportunity.
Okay, what keeps you up at night as a CEO in this market right now?
I mean, it's always, I guess funding. We're in a good spot now. We've got the validation from Kinross, but I've been through enough cycles, to see when it's great, but also to be through cycles when it's bad. So, my worry is, somehow something happens that our projects don't, see the light of day for some reason. I don't think that's happening right now, but that's always in the back of my head. I don't take anything for granted, so I'm a conservative guy, I guess you could say.
Okay, last one. Name one mistake juniors make when they get early success.
Yeah, I think probably they blow their brains out. I think they maybe get ahead of their skis, and they just they assume that capital is going to come, and oftentimes success isn't in a straight line. And you gotta kind of keep some powder dry and be strategic with your money. So having something in hand is great. But I think sometimes people get a bit overzealous and they're like, yeah, 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 just like full go, like we'll figure it out later, and then they get stuck.
So slow it down.
Yeah, slow it down a bit.
There you go. You did it. Great job under great pressure.
Thank you.
Well, thank you again for coming on the show. It is always a blast to sit and converse with you. So please, please come back anytime.
Thanks very much for having me. Really appreciate it.
That's it for this episode of Contributor Corner. If you're not watching the junior gold space right now, you're missing where the smart capital is heading next. And if you're not watching Eminent Gold, you're missing one of the most data-driven, quietly advancing juniors in Nevada. This is where value gets created, so tune in or miss out. Here comes the disclaimer. These conversations are packed full of useful knowledge for your portfolio decisions. And remember, these are the opinions of our own with vested interest in particular assets and companies. Always be sure you speak with your financial advisor and know your own risk tolerances. Join Michael and I next time as we continue to unveil the evolving world of investment insights and sector education. We'll see you next time.